the weekend, and it seems, you know, it's playing out. We were talking in the Qs again. The Qs have been leading the. We had the day to take notice back on July 31st with the market opening at new all-time highs, closing bearish engulfing. And then we had that Friday gap down to close at the lower end of the range. Since then, market has rallied back very strongly, but we're back at that retest level. The first retest of a prior all-time high is typically met with resistance. Again, it can kind of push through a little bit because buyers are impatient for the most part, but we tend to see resistance getting met around these areas, which again, not a big surprise. So we saw today, we saw new all-time highs getting pushed, which is cool, but we closed a and again, they've been in second place in this race, in the newsletter. We know what to expect at the first major retail. Flagging in this out through that 450 all-time highs. Again, just lagging, bigger names a little bit slower to move. Interested to buy this through the all-time highs, but for now, as it chops around in this tighter flag than the recent ranges, just going to take some time. About the NASDAQ and the tech names leading, we are seeing a little bit of a red flag in the tech sector. So we see a very broad I refer to them as Mickey Mouse flags. It's a very tight consolidation, and there's not that many people that are interested in buying these. When you see a year through 450, it's a very obvious chart pattern. But when it's a week at it, the broad market really isn't seeing that pattern. And what we're seeing is as it's setting up closer to support, it's just major sector, every major market was basically doing the same thing, just riding this bullish or any major market to break this upward channel to the downside. And that shift out of that stage, that shift into for now could be a top, could be another base for that next angle. It's trading horizontally. So more of a just starting to see with biotechs. So we can see the same tight consolidation here, closer to support. We saw the same thing with materials. We can see that little flag before it broke. And that's a little bit of this red flag that I'm seeing with tech is again, it's doing that same thing. It's not hovering or trying to run up towards the upper end of the range. It's hugging near support and trying to break out of it. But we've seen other examples recently where that has not been the case. So there's a little bit of a caution. The lights have been green, so to speak, for the last 3 or 4 months. And maybe the light is starting to turn orange, and maybe the light will preferably turn red down the road. Again, we don't overthink these things, but we do want to keep an eye on what the major. sit in cash and let the alert in eBay break out very nicely today through that 94 on very tight risk, versus 92 for now. Again, these are our and the measured move of this area 713. But again, flag, great, great best, but we only care about the eventual move through maybe this name. Or again, the name can only get so tight. Let it shake out. Maybe it has to run this 34 area, but all we care about is that break through that 36, if and whenever that day comes. RC failed today. Again, retests where typically that first retest is met with sellers. And we can see that very clearly here. So we have 200 becomes the all-time high. And then no shocker, we got to retest 200 and it gets met with sellers. So we to charm is when we want to get involved. So let's in next attempt through to Darren had a question and idea on this GLD. Inflation is going up, gold is going to rip. When earnings, again, if we see down here, through this 190 set up for a very long time. This was multiple years, could not break. And we can see right here how tight gold was getting compared to the times that it was first getting up there, pulls back in $30, gets back up there again, pulls even further, gets up there again, can't drop as much. But then if the attempt gets super tight and you get a nearly 70, 80% move since then. And this again is what we want to, these patterns is the focus. Again, these don't come around all the time, but these are the ones when they do work, you got to be involved. MEDP, shouts out to Tesla for the list to MEDP, pulled in very nicely after the big earnings move, pulled in, got very tight, and we got in today through this 438. Stop some for now. If we get some continuation tomorrow, similar candle to this, we get a move, to 460-ish, we can consider raising that stop to what will be the prior day low tomorrow as of the low today. So that was a nice alert that fired off up 3.5%. Again, shouts out came from. Last but not least, we have this Morgan Stanley, prior employer, which is bull flagging this textbook as we can expect. Again, we're going to focus on this retest lesson, all-time high, retest. The buyers aren't as eager. Name shakes out, pulls back in. Again, maybe this is something that we see with the market. Who knows? But we know what happens at the retest. Third, fourth attempt, much higher likelihood for continuation higher. Again, earnings are out of the way. You still got to give it down to about 140. So you're risking about 2% at the moment. Ideally, we see a retest to tighten them a bit more. Instead of there's 4, but nonetheless, very strong chart. Still in from the week prior was this Walmart. Again, this was the first trade that we used the profit-taking alerts at 2 and 3 to 1 risk reward. And now is looking to sell into 105. I'm looking to create, even though else who's going to look to sell at 105 is going to create resistance there. And I want to a few weeks ago, and a prime example of why we don't hold names. The 13% move in the name in a couple, few days. And radar for more or less a crapshoot. This Cisco finally broke out of that wedge. I was not involved in this at the time. I was fully in that Walmart, but nice breakout so far. Nice. S&P Dow Jones. So that's talk about the sectors, and all the way at the bottom is the individual name. So my morning scan every day is to scan major markets first, then major sectors, and then where there's relative strength right now. Again, even though tech looks a little weak, tech is the leader. So then I'm looking at all of the individual tech names. That's the top-down scanning. I want to see very broadly what's going on. I want to see what sectors are working very well, and then the names within that sector that are this and that. Scanning is as simple as having on the top left, you have one day. Again, for everyone that they don't know, so we're taking the time to explain it. So when you are scanning, very simply, top left, you want to have the D selected. Again, if you hit W, it's going to show you the weekly charts. It's going to be a little more difficult to find a weekly. It's going to get just compressed within that candle. So is of what the name has done. And scanning can be as simple as going through your watch list. You can either hit your space bar, the trading view, or going to lag screen. You hit that space bar, it's very easy to scan through your watch list. Now, in the beginning, an example, those 30 stocks, maybe it takes you For you, going to skip the way to with utilizing M1. So I have M1's high yield savings account pulled out. So they're offering 4% right now compared to the national average of 0.4%. Bucket, I want you to think of your normal broker, your normal checking account of where you have all your cash sitting to pay bills, normal savings, whatever it is. Now, typically you're having withdrawals from that account into your brokerage account, into your retirement. Members do, myself included, is I leave the petty cash in that checking account, pay the mortgage, pay the bills, whatever. Any excess money that's going to sit there, I'm going to park in this high yield. If you need to move the money back, one business day, the money's back in the account, sometimes even sooner. It's not like your money is locked up. In this high yield savings account. And if you have the longer term accounts that are also set up at M1, along retirement account, SEP, custodial for a son or a daughter, you then set up the transfers to come from that savings account into these other savings account is that proverbial bucket, and each account is where you drill that little hole in for the money to fall down into those next buckets. It also helps clean up the transactions in your normal day-to-day checking account, so you don't have a bunch of M1 debits every day. You just see, the one bigger debit into the savings account, and you have all those little into those investment accounts. So that is the broad this water bucket savings method, which again in the new moment, again, we're seeing a tech forming at highs. Again, today got down a little bit, but really, this which is okay, but you want to keep these things very simple. So when inflation is going up, they're going to appreciate in value. So that's where we benefit from inflation. Again, it sucks from a purchasing power standpoint outside of the market, but we do still benefit from inflation because these vehicles are designed to, know, and I'll see you guys in the big picture alpha chat.